Everybody's expecting this is going to be a very short event, and fast forward to April, and we're kind of be back to somewhat normal. You look at the forward curve for WTI, and you see like a $10 price drop between now and year end, back down to below $65 a barrel. Um, that said, even if prices stay high, the vast majority of this, as I mentioned, is companies have been incredibly focused on cutting down debt since prices went negative in 2020, and you had a huge wave of bankruptcies, and everybody kind of got religion and said, yeah, maybe we need to reduce our leverage. And so they allocated a huge amount of free cash flow to paying down debt, and M&A deals were almost exclusively equity funded, at least all the public to public M&A deals. And they got leverage down to, the upstream producers are now, majority of them sort of in the 1x debt to EBITDA ratio area, which is very comfortable. So while the higher commodity prices help at a high level, it most of that now is benefiting shareholders versus bondholders. Within natural gas, as was mentioned, there's the fundamental outlook is very strong. Data centers, global demand, LNG exports. Just we may not be seeing a huge bump in prices here domestically, but sort of the LNG exporters, Cheniere's of the world, are probably going to make a bit of a windfall on this, as they did when Ukraine disturbances or the Ukraine war started. But again, I think a lot of those companies, have also gotten their leverage, with the exception of Comstock Resources. All the natural gas focused producers have gotten their leverage ratios back down, and they're again also focusing increasingly on stock buybacks and on dividends. So that's why I kind of said at the beginning, my expectation was, with credit spreads already at historically low levels and companies now increasingly using free cash flow to buy back stock rather than pay down debt, it's nice to see the higher commodity prices. It gives you a little bit of a cushion in the case something does go wrong. But long term, I'm not expecting this to sort of be another, have a long term positive effect on the credit markets. I think most of this is going to go to shareholders, as I mentioned.